Well, we come in a little bit higher, John, on the CPI headline, up 0.1%. The forecast was for a flat reading, and that's what we'd had the month before. However, base effects come into play, and so we do see a decline in the year-over-year headline to 3.1% from 3.2%. As far as the core, it is what was forecast, 0.3, a slight tick up from last month's 0.2 gain, and so that leaves us at 4% for the month of November on a year-over-year basis, again, what was forecast. So some progress as we go forward with these inflation numbers, but that last mile proving slow for the Fed.
Chairman Powell's statement, projections, news conference. What's the guidebook, the playbook, Mike, for you and the team?
Well, he's going to look at these numbers and have a pretty good reason for saying we have made progress, but we're not there yet, so we're going to keep the option open to raise rates in the future, but they're not going to put any timetable on that, and they'll put off any discussion of whether or not they're going to cut rates because he'll say it's too early for that. I do have some good news here in the breakdown of this. Food prices did not accelerate. They actually dropped a little bit, 0.2 gain for the month. For overall food prices down from 3, and food at home drops to a 0.1 increase from a 0.3 increase. So if you go to the grocery store, prices are a little bit more contained. Gasoline prices, as we anticipated, down 6%. That's the big drag on the overall number. Interesting, though, electricity is up 1.4% from a 0.3 gain the month before, and I wonder if that's because we go off daylight saving time and people are turning the lights on sooner. Used cars do drop a little bit. Actually, used cars go up, which is what was anticipated, 1.6%. A legacy of the UAW strike. There weren't new cars, so more demand for used cars. New car prices were down 0.1%, and that'll probably reverse. And then apparel. This was one of the areas that Wall Street was looking at for a drop, and it comes in as a 0.3 drop, 1.3% drop on the month. So maybe a little bit of a bonus for people who are looking for Christmas holiday gifts. And then in terms of shelter costs, they were up by 0.4 during the month. That's up a little bit from 0.3, so not exactly as good as the market had hoped.
What we're seeing also is that real wages are going up, and the average hourly earnings and average weekly earnings are increasing. When is this too good news to be true for the longer term? When does this become something that fuels spending? How long can we continue to see immaculate disinflation, which is yet again what we're seeing in this report?
Well, remember, these are based on wage percentages from the prior month, so it doesn't suggest necessarily that we're getting way out of line. 0.8 is better than most months, but it's still the same as we saw the prior month. Now, the weekly earnings were up 0.5%, better than a decline that we saw of 0.1 in the prior month. So it probably keeps people spending money. We know that people tend to spend what they earn, and it's less about bonuses and less about government aid. It's more about what your paycheck shows. And so if people are seeing their money goes farther, then maybe they're continuing to spend money. We'll see on Thursday about that.